Welcome to Telltales. I'm Mike Nicoletti. Every week, along with my co-hosts Jason Wallace and Hunt Lawrence, we bring you the Cash Flow Memo. Get it at telltales.us. For the next 30 minutes, we're going to dive deep into energy, technology, and healthcare. So download the memo now and get started.
The following conversation is intended for informational purposes only. You should always do your own work to determine if an investment is suitable for you.
This is the Wednesday we're going to figuring out how the companies we have on the pages, the 80 companies or so, are impacted by developments or relations, business activities with China. Not too much on Exhibit C as compared to last week. Negotiations apparently are underway between the US and Iran on having the nuclear program in Iran, the uranium enrichment program in Iran, put some different status. I think from a while ago, the status that the US was trying to achieve was to take the uranium enrichment program in Iran and make it a joint venture with one of the Saudi companies, possibly Saudi Aramco, their oil company. I guess the theory was that if the Saudis and the Iranians were, in effect, owned the enrichment facilities together, that there would be less chance that either one of them would decide to enrich enough uranium to make a nuclear weapon. The other requirement the U.S. seems to have is to try to have Iran limit the range of their missiles. But I think that joint venture with Saudi Arabia is a much higher priority. So I think the next meeting is Friday. I think they've decided to meet in Turkey rather than Dubai or Abu Dhabi. And we'll see how it goes. Obviously, from a macro point of view, if there is some type of agreement between the US and Iran, and if sanctions are lifted, there will be more oil in the market because Iran won't be limited. You can see from Exhibit C, we have Iran gradually building up to 3 million barrels a day, then down a little last year to 2.8, and then predicted down this year to 2.7. Without sanctions, I suspect that they pretty quickly get back to 3 million barrels a day and start to climb from there. That might not be that much of a dislocation for the oil market because I think Russia is going to continue to come down. This latest arrangement with India on tariffs, where their tariff rate's been reduced to 18% across the board, includes a commitment India not to take Russian crude. And if you look at the bottom and the demand, India's been a steady increase in oil demand up to predicted just under 6 million barrels a day this year. And I don't know how much Russian oil they were taking, but that would be a difficult market for Russia to replace. You can see from the future prices, which are, as of last Thursday, WTI $65 in the near month. By the time we got to 26.64, so it's pretty much flat market, and then a bit of backwardation in 27 at $61. So the concern that people in the oil production business had of seeing oil go into the low 50s hasn't happened yet. If there is positive news in Iran, it'll definitely be a move towards lower prices. But I think one of the things that has happened with the oil market, WTI trading around 60 with the expectation that it might come down below 50s, I think that's curtailed enough activity so that U.S. production will be down. And generally, production down across the world, or less projects starting. When you start projects in the water or in remote areas, you pretty much have to finish them. You can't stop halfway or slow it down very much. But I think a number of projects have been put on hold because of the low oil price, and eventually the surplus of supply over demand will be used up. Not too much to commentate on Exhibit A, except to point out that last Friday, Trump finally announced a nominee for Federal Reserve Chairman. Kevin Warsh is going to be more conservative, I think, than any of the other candidates. He has consistently called for the Federal Reserve balance sheet being smaller. In fact, he was added as a Federal Reserve governor because Kevin Warsh was a young staffer when Bernanke was put in charge. And after that, and I think he served as Federal Reserve governor for about 4 years. But when Bernanke came up with the idea of quantitative easing after 08, 09, since they were afraid of deflation and the economy, real GNP was very flat. I believe it's the case that Warsh voted for that as a governor. It's typically, you don't have dissents. And certainly, if you're a protege of the chairman and you're in your early 30s, you don't dissent. But interestingly enough, Warsh then resigned as a governor, presumably over some disagreement with the policy his mentor was following. In interviews given as recently as 6 months ago, the Federal Reserve balance sheet, which is now around $7 trillion, I think it got as high as 9 when they were using the balance sheet to buy long-dated treasuries to help finance the spending in COVID. I mean, if we look at Exhibit A and we go back to the COVID years, 20 and 21, look at that, all other spending went to almost $3 trillion. And the deficit went to $3 trillion. And a huge amount of government paper had to be issued. Government bonds held by the public before COVID were 17 trillion. By the time we got through COVID, it was 24. Warsh is on record in these interviews saying that he thinks the right size for the balance sheet is like $1 trillion or whatever it was before COVID. To go from 7 to 1 quickly will not happen, but it definitely will make a difference to future Fed policy if, as chairman, he is able to get a consensus among the governors to go back to what they call QT, or quantitative tightening, which is consistently reducing the size of the balance sheet. So that's something to watch. I think what his position is that the balance sheet should be lower, but the Fed funds rate, 3.5 or whatever it is now, should be also lower. So I think he's very likely to get confirmed. We have one senator from North Carolina who's retiring, Tillis, who is going to hold up confirmation hearings for Warsh until the Justice Department or the U.S. Attorney's Office in the D.C. drops or settles. They've issued subpoenas for Powell and others who worked at the Federal Reserve relating to Powell's testimony about how much redoing the Federal Reserve building was costing. Obviously, that was the Trump administration overstepping in a significant way. It'd be very good to have that drop, have a speedy confirmation for Warsh. And when on his announcement last Friday, price of gold went down by 30%, price of silver went down by 30%. So I think having Warsh as governor, plus getting this deficit reduction, which Bessent, the Treasury Secretary, has pointed to, going from 1.9 in fiscal 25 to 1.5 in the fiscal year we're in, and then maybe lower, maybe to 1.3 or 1.4 or 1.2 even in fiscal 27. If we were making that much deficit reduction and we had a really strong Federal Reserve chairman doing quantitative tightening rather than quantitative easing, the price for gold, which was bid up by central banks not wanting to hold U.S. dollar government bonds and gold, if we started to get that type of a phenomenon, the people at central banks who are advocating keeping some of the reserves in gold would start to have a change of heart. And in fact, I think it would point to lower gold prices, lower silver prices, and generally better business conditions. Now, the question is, and we're going to start to get into what impact China has. And of course, part of that is they're the world's leading exporter, and how they manage their currency certainly has an impact on a lot of the 80 companies we have on the 20 pages. A Federal Reserve chairman trying to reduce the balance sheet of the Federal Reserve, plus improvement in our deficit, we could get a stronger dollar. It's not impossible, and that would be a good outcome. Jason, anything else to add?
No, not really. The only thing, it's only related because it's government spending, but NASA has a mission to the moon that they're embarking on in early March now. It got delayed from this coming week, but the rockets, it was staged and ready to go, and they're going through the last prep. So it's the first time we've sent humans to the moon since 1972, and I don't hear anyone talking about it. So it's a bit of good news, I think.
What I propose in covering China impact is we do page 20 first, and then we do page 1, then we do page 19, then we do page 2. So we're just not concentrating on the beginning of the 20 pages, but news this week, which is having XAI, which is competitive to OpenAI, to Alphabet, Gemini, to Anthropic, to whatever Meta's doing, acquired by SpaceX, where Musk's laying out this plan where he thinks that data centers should be located in space to use the sun's rays for power, and then transmit back and forth to Earth from this system of satellites. Jason, you have some familiarity with this based on some of the things you've done in your career. Is that, what do you think the feasibility of doing that is?
I think it's actually a real thing, and SpaceX might be the only company positioned to be able to do it with the economics of launching payload into space. There's an enormous amount of challenges with it. Yes, the sun is going to shine on your solar panels at a higher intensity, and it's free energy, but getting rid of the waste heat from your GPUs is a huge challenge. Everyone says space is cold, but there's nothing to conduct heat away. So the only way you get heat out of a craft in space is you radiate infrared away. And you need quite large radiators to expend the heat that these data centers are going to produce. And then something that I don't see a lot of people talking about, there's a lot of discussion on the internet about this and podcasts and whatnot, but there's one really specific orbit that you need to be in to stay in orbit and stay in the sun's, in view of the sun 24 hours a day. And it's called a sun synchronous orbit, and SpaceX just applied to put 1 million satellites into that orbit, which is an enormous amount. All of Starlink is 10,000 satellites. I thought a data center, they'd probably need 20 to 25,000 satellites. 1 million satellites is just off the charts. So they're not going to be granted that. But if you're putting tens or hundreds of thousands of satellites into one specific orbit, I think what SpaceX is trying to do is lock that orbit up. So they'll be the only provider that's able to put their satellites in the spot that a data center would have to go.
So what about latency from orbit?
Space is closer than you think. I don't think latency is really the issue, because in order to talk to a data center, and there's some in Oregon and Memphis and Northern Virginia, you're hopping through a lot of networks on the ground, going through a lot of routers. To get to space, you're going to go to a ground station, and the signal is going to be transmitted up. Or potentially, as Starlink would like to do, is talk directly to a cell phone. So I don't think latency is really the challenge there.
We'll do a little China here at the end and some healthcare, but rest assured that there are going to be 2 new companies on the pages, at least 2 from the IPOs. We won't be able to resist SpaceX, which is scheduled to come public this year. And then the other one would be Anthropic. Before we get into China, just want to get Jason's view Microsoft is off, Salesforce is off, ServiceNow is off, Snowflake is off, all these software companies, mostly because Anthropic seems to be pushing or developing apps that would possibly compete with software. Now, Jason, when the first chat language model was unveiled, kept saying AI is not going to be that much of an issue. It's just software. So here, about 2.5 years later, Jason, what's your view on the impact on companies providing software as a service from the Anthropic applications or projected applications from Anthropic or Gemini or OpenAI or anyone else out there?
Yeah.
Is this being overdone?
Too early to tell. But the fear is that AI can code software on demand for you and replace your expensive software as a service tools that you're using at companies today. The interesting thing is a lot of these AI labs still use Salesforce and they use Slack and ServiceNow and all those vendors still. But the fear is that if you have $1 million contracts with a software vendor, you might just instead allocate one employee to have one of the AI like Claude code a new software application for you and they'll manage that. I guess one argument I have why that won't occur is instead of buying software, you're buying a package that includes support, troubleshooting, training. And one analogy I have is the old business called Red Hat, where they were selling open source operating system software. But what you're really buying was the support infrastructure all around it. They were someone you could call, ask questions to, and they were constantly monitoring the software for security vulnerabilities, and they would patch them for you. So Red Hat really made a business around selling free software, and they were very successful for a lot of years. We'll see how it shakes out, but I think there's still a place. Maybe the industry changes, but there's still a place for SaaS software products. You're not going to want to be in the business of creating a bunch of software tools for yourself when your company has a mission that they need to execute on as well. But I think there's some things are in danger. And if you own some of these software businesses, I think what you want to ask is how critical is that tool to their customers? If you want to know, you want to have an answer of, is that software something that's going to be one of the first tools that a company rips out, or is it going to be the last tool that a company rips out and replaces? And I think that's the question everyone should be asking. And maybe the canary in the coal mine is CRM tools. So if you look at the performance of Salesforce and HubSpot, it's been pretty abysmal lately. And I think the reason is you're automating the Salesforce and customer interactions, which are obviously hugely important, but it's not necessarily the system of record for how the business runs.
And you've got, given our 5-minute overage, we've got about 10 minutes left, and we always have to do some healthcare. Let's turn to page 20 in terms of China impact. Uber, DoorDash, Airbnb, Five Below, Arrow. I can't remember whether DoorDash and Airbnb operate in China. I don't think it's too big a percentage of their business. And Jason, I think I remember that Uber withdrew from China. Five Below, obviously, a lot of the material they sell probably comes from China. Arrow, which is a really interesting company that Mike and Jason own in their partnerships. Pharmaceutical companies, sometimes pharmaceuticals are actually manufactured in China, and that becomes not as stable a supply chain as you'd like. But any other thoughts or views on page 20, Jason?
No, I don't think there's any significant impact on these.
If we switch, I knew if we started on page 1, we'd never get all the pages done. So I figured we'd do page 20 and then page 1, and then let's switch back to page 19. Page 1, Apple, we've covered every time Apple comes up that a great deal of their equipment is made in China. Foxconn, Taiwanese company, largest employer in China, largest factory space in the world. But Apple seems to pretty well. I think Amazon is not too much activity in China. Alphabet, the founders of Alphabet, swore off China. And in fact, there's a Chinese company called Baidu, basically does for the Chinese market what Google does for us. Microsoft, I think, has some activity in China, but not a very significant percentage. Jason, I think probably 40% of the 2 million cars that Tesla makes made in China. Their principal competitor outside of China is BYD. Not to say that some of the other Chinese car companies are now or significantly in the future be competitors, but so I would say the exposure here is the bookends. Apple, because of all the iPhones and other equipment that's made in China. Tesla, because 40% of their car production is in China. Any other thoughts there?
No, I agree. I would add for Apple, they have significant sales in China as well. And it's happened in the past where the leadership, Apple falls out of favor with the leadership and they direct their citizens to not purchase Apple products. The flip sides happened recently where Apple had a great quarter and it was largely driven by sales gains within China.
Page 19 is United Healthcare and CVS. Those are primarily U.S.-based businesses. They're businesses that Jason has a pretty strong prejudice against. Regeneron is a successful cash flowing pharmaceutical developer, and Eli Lilly is the king of this part of the capital markets, having just recently surpassed $1 trillion in value. Don't see too much China impact here, Jason, and we've got to spend some amount of time on healthcare. I don't think it hurts for Jason to cover again why we don't like PBMs and why we think the Trump administration with most favored nation pricing is doing great things. But over to you, Jason.
Yeah, I guess Chinese risk to big pharma in general is interesting. If you did the homework of reading Apple in China, you're familiar with the story of how our demand for low-cost electronics enabled the Chinese to educate a huge workforce on how to build the electronics. And then that's now translated into a very mature electronics industry domestically in China. And the same thing's happening in biotech, where initially we got reagents and precursor chemicals from China, and then they started to manufacture more parts of the supply chain. And now they're pretty well integrated into every piece of the supply chain for pharmaceuticals, but they're not any single points of failure today. They have GMP facilities where they manufacture a lot of the generic drugs used in the world. They have a healthy industry of what's called CDMOs and CROs. So these are contract organizations that help with drug discovery. They also help with running your clinical trials and manage that for you. So they're becoming very familiar with end-to-end how to design drugs, test them, bring them to market. And I think because of that, they also manufacture a lot of biologics. I think the compounded off-label versions of Eli Lilly's weight loss drugs do come from China. So they have everything in place now to have a very real competitive threat to U.S. big pharma. So I think that's a longer-term Chinese threat.
Page 2, we've gone through the Salesforce, ServiceNow, Snowflake. Their risk is not China so much as it is Anthropic and the other language models. Oracle seemed to stabilize a little bit this week. They've hitched their data center development very large extent to OpenAI, and OpenAI has been waiting on the $100 billion to show up. Jensen Huang, the CEO of NVIDIA, has made it clear that they'll be a significant participant, but they didn't underwrite. The thing that interests me is SoftBank, which is very strategic in doing this kind of stuff. I think is up for 30 billion of the 100. But in morning discussions with Mike, I said, why would Amazon be part of that financing? And the answer, and I'm curious Jason's view on this, is that Amazon Web Services is the largest and the first cloud data center developer. And Microsoft is second with Azure, and then Alphabet with Google is third, and Oracle's fourth, I guess. Amazon, because Microsoft financed, provided server time to OpenAI. I think they probably had some provisions where the chat language models weren't as available to Amazon Web Services. And so this would be a chance for Amazon, very extensive client base, to have access to the OpenAI language models. Does that logic hold up, Jason, do you think?
Oh yeah, I think it does. I hope they don't overpay for the right to offer the OpenAI libraries on AWS, but I think their strategy is very similar to maybe Apple's, where they're going to be a provider of any model that you'd like to run within the cloud, versus Microsoft's kind of hitched themselves to OpenAI, although they're distancing themselves a little bit now, and Google's obviously Gemini. So I think AWS has a history of being an aggregator of all of the software projects that they can from the internet and providing them as a cheaper, faster service in the cloud.
I think page 18 will be our last page, so we don't go over. I think we've covered enough healthcare already, Lilly and Regeneron and the PBMs. Page 18 is interesting in terms of China impact. Freeport, which is a very, very large copper producer, Albemarle, which is a very, very large lithium producer. CF Industries makes ammonia, mostly for fertilizer, and Nextera, which is the largest utility that we have in this country, with Florida Power and Light and some expansions that Florida Power and Light has. But Nextera owns more wind capacity than anyone else in the public market, and also more solar capacity. And of course, a lot of the solar blades and other equipment come from China. It's been very hard to make that equipment here and be competitive. Same with the solar cells. Nextera's kind of non-utility business, wind and solar power generation, certainly is impacted by policies in China. CF Industries, ammonia, probably not so much. Albemarle, lithium, China for batteries, for EVs and utility, have to be easily the largest consumer of lithium. Copper spent quite a lot of time in the kind of $3.50 to $4 pound range, and just recently started trade in the $6 range. I think one of the reasons it was in a fairly stable kind of, some margin for the Freeports and other copper producers, but not huge margins, was China used enormous amounts of copper to build out. But now that they've built an oversupply of residential, commercial buildings, and you see that in terms of where their prices of commercial properties or residential properties are down probably 30% from the high, probably have another, 30% to go down before the price equates demand with supply. Just there's not going to use as much copper. Maybe India, as they build out, will use it. But once economies get mature, they just are not growth consumers of copper. Lithium is a little bit unusual. First of all, batteries. Jason knows a lot about batteries, so I'll try here. But there are other better batteries that have more range. But so far as I know, Jason, they all use lithium. Is that your understanding?
The best battery chemistry does use lithium, yeah.
China just does more batteries and does batteries better than we can. But the Saudi Arabia, it's often said the Saudi Arabia of copper is Chile. And I guess you'd say the Saudi Arabia of lithium are these solar facilities in Argentina and Chile. These are out altitude, and they're big salt flats. And you mix in water. You need large quantities of water. And then you put these in ponds. And when the water evaporates, you're left with the lithium. And those are very capital intensive. They take a while to develop. But the alternative sources of lithium, which would be out of rocks, or there's some attempt to try to take briny water produced in and around oil and gas wells and try to extract lithium. Basically, in time, it's going to be hard to compete with those large projects in Argentina and Chile, because you're in effect using heat from the sun to do your evaporation. Just it's a lot of front end cost, and then once it's up, it's going to be very hard to compete with. Jason, any other thoughts on page 18?
Yeah, I would say that nearly all of the lithium mined around the world goes to China for refining and then ultimately produced into batteries. But Tesla, I believe 2 weeks ago, opened up a lithium refinery in Texas. From groundbreaking to opening was just over 2 years. And there's not a lot of details about it, but they're saying they have an entirely new chemistry to extract the lithium, and it makes it economical to do stateside now. So it'll be interesting to hear more about that project when details emerge.
We've made it through 35 minutes without Mike. So everyone, please stay well and be healthy. We'll be here 7 days from now. I think by that time, Mike is back from Switzerland. So all three of us will be here 7 days from now. Thanks very much for listening. Take care.
The views expressed on this podcast are the hosts alone and do not constitute an offer to sell or a recommendation to purchase or a solicitation of an offer to buy any security nor a recommendation for any investment product or service. While certain information contained herein has been obtained from sources believed to be reliable, neither the hosts nor any of their employers or their affiliates have independently verified this information, and its accuracy and completeness cannot be guaranteed. Accordingly, no representation or warranty, expressed or implied, is made as to, and no reliance should be placed on, the fairness, accuracy, timeliness, or completeness of this information. The hosts and all employers and their affiliated persons assume no liability for this information and no obligation to update the information or analysis contained herein in the future, and may or may not hold positions in the securities mentioned.